BlackRock CEO Larry Fink sits down with Deirdre Bolton and Eric Schatzker tomorrow as the guest host for the 7 a.m. hour. He'll discuss the deficit debate and what it means for America's AAA credit rating. Well, it may have been a tumultuous quarter, but BlackRock reports that inflows into global exchange-traded funds and exchange-traded products more than doubled in the first quarter from the same period in 2010. Deborah Fuhr is the global head of ETF research and implementation strategy at BlackRock, and she joins us now with more on this quarterly report. Deborah, thanks for coming in.
Thank you.
So we saw an increase of global assets under management in ETFs of about 6.7%, a total of about $1.4 trillion in assets in ETFs. What do you think was sort of the primary driver in the first quarter of folks getting in?
Well, no surprise, the drivers are a number of things. One, the crisis in the Middle East and North Africa. We've had interesting weather patterns, so droughts in China and floods in other crop-producing countries. And then more recently, we've had the events in Japan. So what we saw was, in January, investors were concerned about the Middle East, North Africa. So money was coming out of broad emerging market exposure. And you have to be careful, though, because when you think about broad MSCI emerging market, the only Middle Eastern country in there is actually Egypt. So if you're concerned about other countries, they're really frontier markets. That month, money was still going into Brazil, Korea, Taiwan, and Russia. Money was going into the U.S. because we have seen some pretty good earnings coming out of the U.S., employment numbers looking better, and we saw money taking profits from gold exposure in January. February, we saw money coming out of emerging markets going into developed. We saw people going into energy commodities because they felt the events in the Middle East were going to drive energy prices higher, at least in the short run. Money going into agricultural commodities because of the concern about droughts and floods. And then looking at inflation as being a slight concern, we saw people looking at real estate investments. We saw looking for dividends, for high yield. And in March, money's going back into some of the emerging market countries. We're seeing some commodity plays, so Russia, South Africa, Australia is also benefiting from the commodity view. And we're also seeing money going back into gold, some money going into silver. So ETFs are a really good bellwether for where people are putting money to work. And after the events of March 11th, we saw investors see that the market in Japan had come down way more than they really felt was appropriate given the size of the earthquake, the tsunami. And so on March 15th, we actually saw the ETF listed here in the U.S. on MSCI Japan had its highest ever trading day in dollar amount and number of shares. And for the month, it had a net inflow, so new money, of $1.7 billion. And so investors found this as a very easy way to gain that exposure rather than trying to pick stocks. Because I think the challenge is when markets are volatile and correlations are high, it's difficult to pick individual stocks and bonds.
And is there any sort of predictive power in seeing where these ETF fund flows are going?
Well, I do think that the data comes out faster than mutual fund flows, so it is something that you can react to. I know that we publish data on the quarter 8 days after the end of the quarter, where mutual fund flows tend to be 2 months after the fact. So I do think that there is a bit of momentum, and you can see the trend where people are putting money to work and taking money away. And clearly, some of those trends are longer term in terms of if you see good earnings announcements continuing, people tend to keep putting money into certain markets. And I think that the views that many of the brokerage firms are expressing does also reflect in how you see money moving. So, you know, recently we've seen how Goldman Sachs had made a call that now might be a time to take profits out of commodities, which has influenced some people taking money out of various commodities, trying to take profits. Because you look at the price of silver and gold hitting, 31-year highs, all-time highs. People have, in many cases, made significant appreciations in their holdings because they've been in there for a while. And so I do think there is some predictive power, but that's one of the beauties of ETFs is for some people they use them to equitize cash, some use them as core holdings, so it's long term, others use them tactically, others use them strategically, so people have them in very different pockets of their exposures. And I think one of the beauties is, we are seeing that retail investment advisors as well as large professional investors do find the ETFs attractive. And it's one of the few products that retail has access to the same toolbox at the same annual cost. Because normally, if I'm a large pension plan, I would pay significantly less on an annual cost basis than a retail investor buying 1 or 2 shares. So we are seeing all types of investors around the world benefiting from these products.
Now, Deborah, just quickly here, this is something we were talking about in the break before, that basically you've seen steady inflows. You've not seen outflows from ETFs as a overall asset class. Is there sort of a critical mass you get to where, their ETF universe is just so huge that it's not going to grow that much more?
Well, it's an interesting question because in reality, ETFs are still relatively small. If you think in the U.S., we broke through $1 trillion in the ETF industry. It took 18 years. For mutual funds, it took 66 years to break through $1 trillion. But it's $1 trillion versus 11 for mutual funds in the U.S. So really, ETFs are small, although they are quite exciting and many people use them. So I do think there is significant room for growth. And until they really represent a very large allocation out of the global portfolio of asset allocation, they can continue to grow at a successful rate.
Deborah, thank you so much for coming in. Good to talk to you. Deborah Fuhr with ETF research over at BlackRock.